Many people see money as a scarce resource. They think you need to have money to make money, but the truth is, you can create wealth by understanding the tools of finance. One of the most powerful tools is accounts receivable. This is simply the money owed to you by customers who have already received your goods or services. Think of it like a snowball. You start with a small amount of snow, but as you roll it along, it gathers more and more snow. Eventually, it becomes a powerful force. Accounts receivable can work the same way. You start with a small amount of money, but by leveraging it correctly, you can create a much larger sum. This is the power of financial leverage. Let's say you have a small business. You sell a product for $1,000. The customer takes delivery and agrees to pay you in 30 days. You now have $1,000 in accounts receivable. This isn't cash in hand yet, but it represents future cash flow. You can leverage this future cash flow to grow your business even further. This is the fundamental principle we'll be exploring. We're going to learn how to turn that initial $1,000 into a much larger sum, all through the magic of accounts receivable. This isn't about tricks or shortcuts, but about understanding how money works and using that knowledge to your advantage. Remember, the rich don't play by the same rules as everyone else. They create their own rules. Now let's dive into the practical steps of turning $1,000 into $48,000. Imagine you have two companies, Company A and Company B. These are separate legal entities, each with their own financial records. This separation is crucial to our strategy. Company A sells that $1,000 product to Company B. Now, Company A has $1,000 in accounts receivable, and Company B has an outstanding invoice for $1,000. Here's where the magic happens. Instead of simply collecting the $1,000, Company A sells this invoice to Company B for, say, $950. Company B, happy to defer payment, agrees. Now, Company A has $950 in cash. They've successfully converted their receivable into immediate cash, albeit with a slight discount. This is a common practice in business known as factoring, but the process doesn't stop there. Company A, now flush with $950, uses this capital to produce and sell another product, repeating the cycle with Company B. Each time, they convert the receivable into cash at a slight discount, constantly reinvesting and growing their initial $1,000. This might seem like small gains at first, but imagine repeating this process multiple times. The snowball effect starts to take hold. Your initial $1,000 is constantly working for you, generating more and more revenue. The key to this strategy lies in understanding how different business entities can work together to create financial leverage. In our example, Company A and Company B are separate legal entities, even though they are owned by the same person. This is perfectly legal and a common practice in business. This separation allows for internal transactions that can be structured to maximize financial advantage. By selling the invoice to Company B, Company A can access immediate cash flow. This wouldn't be possible if they were operating as a single entity. Think of it like a game of chess. You need to move your pieces strategically to gain an advantage. In the world of finance, your business entities are your chess pieces. By structuring them correctly, you can create opportunities for growth that wouldn't be possible otherwise. This concept might seem complex at first, but it's the foundation of wealth building. The rich understand how to use legal structures to their advantage. They don't shy away from complexity, they embrace it. This is the kind of financial education that is rarely taught in schools, but it's essential for anyone who wants to achieve true financial freedom. Now let's talk about how this strategy can unlock even greater financial opportunities. Imagine repeating the process described earlier multiple times. Company A continues to sell products to Company B, generating a significant amount in accounts receivable. Let's say this eventually adds up to $48,000 in receivables for Company A. This is where things get really interesting. Company A, armed with this substantial amount of receivables, can approach a lender like a bank and apply for a line of credit. The bank, seeing the $48,000 in receivables as an asset, is likely to approve the loan. This is the power of leveraging your assets. You've effectively turned your initial $1,000 into a $48,000 line of credit, all because you understand how to leverage accounts receivable. This line of credit can then be used to further grow your business, invest in other assets, or simply provide you with financial security. Remember, this isn't about getting rich quick. It's about understanding the tools of finance and using them to your advantage. It's about creating a system that works for you, generating wealth and opportunity over time. Section 5. The importance of cash flow. Keeping your engine running. It's crucial to understand that this strategy hinges on maintaining a healthy cash flow. While we're generating substantial receivables, they represent future income, not immediate cash. Therefore, managing expenses and ensuring timely payments from Company B is critical. Think of it like this: your business is an engine, and cash flow is the fuel. Without a steady supply of fuel, your engine sputters and stalls. Similarly, without consistent cash flow, your business can't operate, let alone grow. This is where financial discipline comes into play. It's tempting to overspend when you see a large number on your balance sheet. But remember, a significant portion is tied up in receivables. Smart budgeting, careful expense management, and ensuring prompt invoice payments from Company B are essential to keep the engine running smoothly. This disciplined approach ensures you can meet your financial obligations while continuing to leverage the system for greater gains. Remember, slow and steady wins the race. A consistent, well-managed cash flow is the key to long-term success. The Rich Dad Perspective. Thinking outside the traditional finance box. This strategy embodies a key principle I often emphasize: thinking outside the traditional finance box. Most people are taught to save their money, get a good job. While there's nothing inherently wrong with that, it's a slow and often limiting path to financial freedom. The rich, on the other hand, understand that wealth is built by leveraging assets, understanding financial systems, and being willing to take calculated risks. This strategy, with its focus on leveraging receivables and structuring transactions for maximum benefit, is a prime example of this mindset. It's about understanding that money is a tool, and like any tool, it can be used in various ways to achieve your financial goals. Don't be afraid to challenge conventional wisdom, explore alternative financial strategies, and seek knowledge beyond what's taught in traditional educational settings. Remember, the most significant asset you have is your mind. Invest in financial education, learn about different strategies, and develop your own path to financial success. Taking action. Your first steps towards financial freedom. Now that you understand the potential of leveraging accounts receivable, you might be wondering how to apply this to your own life. Remember, knowledge without action is useless. The first step is to assess your current financial situation. Do you own a business? Are you generating consistent revenue? Do you have a basic understanding of financial statements? If you answered yes to these questions, you're already on the right track. Next, research and understand the legal and tax implications of setting up multiple business entities. This strategy relies on a solid legal and financial foundation, so consulting with qualified professionals like lawyers and accountants is crucial. Start small. You don't need to turn $1,000 into $48,000 overnight. Begin by implementing the core principles of this strategy on a smaller scale, gradually increasing the complexity as your understanding grows. Remember, this is a marathon, not a sprint. Focus on building a sustainable system that generates consistent results over time. Conclusion: the future of your finances. We've explored a powerful financial strategy that can turn a modest sum into significant wealth. We've delved into the mechanics of leveraging accounts receivable, the importance of business structure, and the potential rewards and risks involved. But remember, this is just one strategy amongst many. The world of finance is vast and constantly evolving. What's crucial is developing a mindset of continuous learning, constantly seeking new knowledge and strategies to improve your financial situation. Don't be afraid to challenge the status quo. Think outside the traditional finance box and explore unconventional paths to wealth building. Your financial future is in your hands. Take control, educate yourself, and build the future you deserve.